Hi there, good afternoon. You've tuned into ET Now and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. A very good afternoon to you, Vinny. And looks like the markets are siding the shade that you're wearing today. At least the benchmark indices, they are actually seeing a very subdued trading session. 0.2 of a downtick coming in for the benchmarks. Let's take a look at what Nifty Bank is doing at this point in time, because Nifty Bank also for the most part of the trading session was moving in tandem with the benchmark indices. Right now it has recovered from the day's lowest point and it is trying to break into the positive territory. Small cap index is the one that is actually bucking overall trend. It is trading with a positive bias of about 0.2%, while mid cap index is declining in trade today. Talking about the sectoral performance, you have the IT index that is seeing the sharp cut, 2% downtick coming in on the IT index. We will tell you later in the show what is actually dragging the IT sector lower in today's trading session. Energy, media, FMCG are the other set of sectoral losers in trade today. Talking about the brighter side, and that is the realty index, 1% uptick coming in for realty, followed by Nifty Auto Index, which is seeing a strength of about 0.9%. So that's the way how the market setup is looking like in today's trading session. Subdued trading session is what you can term it as, Vinny.
Okay, subdued trading session is what we are seeing coming in for the markets as of now. But let's move on and bring on board our guests for today. And on the technicals, we have Kunal Bothra joining in with us, while from the research team today we have Lisa as well as Vamakshi joining in with us. A very good afternoon to all three of y'all. And I'm going to be starting with the first talk that actually I'm going to talk about a sector that is in focus today and has been in focus for some time. That's the Nifty IT space. Whether you look at TechM, Infi, HCL Tech, all these are in focus, while because EPAM has cut the guidance yet again. Now, because of that, we're seeing that Nifty IT has become amongst the biggest sectoral losers. And what has happened is that EPAM Systems has cut its quarter and full year guidance in terms of that for the full year, in terms of revenue as well as the profit outlook as well. Now, the company said that it is seeing customers being more cautious about the spendings. Now, reduced guidance, what is that coming in? EPAM said that they've reduced its current quarter revenue outlook to the range of $1.16 billion to $1.17 billion as well, from previous revenue target. What they've given was $1.195 billion versus to $1.2 billion. Other than that, full year, it sees a revenue of $4.65 billion to $4.8 billion versus earlier estimates of $4.95 to $5 billion. So yes, that you're seeing a reduction coming in terms of the guidances over there as well. What is the commentary? They're saying that the pipeline conversions are occurring at a slower rate than previously assumed, and that it is also seeing some reduction in the top pipeline as well. So yes, because of global news coming in there, we're seeing the Indian IT companies are also a bit under pressure. Whether they look at TechM down 2%, Infosys down almost 2%, while HCL Tech down almost 1.5% as well.
All right, we spoke to Harsha Upadhyay of Kotak AMC, who believes that the valuation risk in IT is limited and he prefers domestic-facing companies over the global ones. What else he had to say? Listen in.
I think the valuation risk is limited, given that it has also kind of consolidated over the last 5 or 6 quarters, especially the large cap IT. However, there is still a question mark on the business momentum. So to that extent, as I said initially, the domestic-facing businesses could probably do better than some of the global-facing sectors, including IT. So that's where, while we have some weight in IT sector, we continue to favor some of the domestic businesses in the portfolio.
All right, moving on. Let's put the spotlight on Angel One, and that particular counter actually rose as much as 3.9% earlier on in the day. That's when I checked it last, taking the stock to the highest level since December 20th. As you can see right now on your screen, 4% uptick coming in for Angel One. Motilal Oswal has said that Angel One's May gross client additions is highest since May 2022, while the number of orders rose significantly on a month-to-month basis due to more working days in the month of May than in April. Also, remember that Angel One had reported market share improvement in all of the 3 segments on a month-to-month basis, is what Motilal Oswal flagged in their report. And they are giving a thumbs up for Angel One, and because of that, you can see what the stock is doing today. 4% after coming in for this one.
Okay, Motilal Oswal is giving it a thumbs up and surely buzzing in trade, Kunal. But are you giving Angel One a thumbs up on the charts as well then?
I think today's move is more of a breakout move for Angel One. Over the last 2 months, the stock was into a, if you can use the term, volatile trading range. because from 1350 on the upside towards I think 1200 on the downside, it was almost like a 10% band for Angel One, and the stock today has managed to finally break past about the 1350 mark, which means that it's a strong confirmation of a breakout. The stock has come back above its 200 moving average, so that's also another additional level of confirmation for Angel One, and looks very attractive on the charts because now the stock could probably be looking to come back towards its previous highs of I think 1800, 1850 mark. So I believe that there could be a substantial upside for Angel One from current levels because of the way the trends, the indicators as well as the prices have behaved over the last couple of weeks. 1350 mark, which is the previous breakout, that could be termed as a good a point to add or accumulate the stock in case if there is any kind of a mild correction going forward.
All right, that is the take coming in from Kunal also on Angel One. Vamakshi, let's put the spotlight on Nelco.
Well, yes, Cheryl, this stock is buzzing away in the trading session today. Look at the sharp uptick that has come in on this count of 14% higher as of now, and let's understand why. Well, Nelco entered into an agreement with the promoters as well as the other shareholders of Spices Networks Private Limited, and this took place on June 5th, that is yesterday. Now, they will be making an initial investment of around 1 crore, which actually represents 9% stake of the paid-up capital of Spices Networks Private Limited. Now, subsequent to this, they are also expected to make further an investment in order to increase the company shareholding in this particular company, that is Spices Networks, to at least 30% of the paid-up capital. So that is the news flow surrounding Nelco, and that is the reason why the stock is up and away in the trading session today, nearly 14.5% higher.
14.5% uptick, a good up move coming in for Nelco there. But Lisa, you've picked out HBL Power for us today. What's the news flow here? Why is it in focus?
Focus as there is a potential deployment of the Kavach system, which is an automated train protection system, and this is following the Odisha train tragedy that happened just a few days ago. Well, I do remember that HBL Power is a major player in the transport and equipment related services, so it becomes one of the prime candidates for receiving government order related to the Kavach system. So the recent developments that has sparked optimism among the investors that HBL Power can receive some orders related to the Kavach system. And so we can see that the price is up around 6%, but not only today, in the last few days, the stock has moved up around 20% following the Odisha train tragedy. So yes, HBL is in focus on the back of this.
All right, that's the take coming in on HBL Power and why this one is soaring in trade today. Kunal, let's talk about RBL Bank and how is this one looking on the charts to you now?
So, today the stock started off on a bit of a softer note. My expectation was that probably the stock would probably get back into a consolidative phase. But in the last half an hour, last 1 hour, the stock has made a very strong comeback from 171, 72. The stock is back above 175 odd mark, the last I'd seen. It's also on a strong continuation move for RBL Bank. More importantly, on the weekly charts, the stock has confirmed a flat pattern breakout. The breakout point for RBL Bank was approximately at 160 mark. So if you try and look out for the flat pattern targets, it's closer to 185, 190 range for RBL Bank. So I think the way the stock is poised, the recent charts where the stock has gained momentum, as well as the inclination of the markets of not buying the large cap, traditional large cap banking names, but then shifting on to the mid cap or the slight high beta names, the likes of IndusInd Bank, Axis, RBL Bank, etc. So I would believe that RBL Bank could be a stock which can gain some decent momentum going forward. 188 approximately could be a target range which a trader can keep an eye on, and stop loss for this trade could be kept at 165.
Okay, 188 is what a trader could keep an eye out on for RBL Bank in terms of target price. Let's move on, talk about the steel names, whether you look at Tata Steel, JSW Steel, Steel Authority of India, all these stocks are in focus today. What is happening is that the steel prices, that has continued to see a fall coming in. Now, this decline is coming in since the month of March. JSW Steel also announced price cuts to rupees 2,000 per ton on the HRC prices as well. Now, other than that, HRC prices now stand at 57,250 per ton. Domestic steel demand is relatively healthy as well. Also, let's not forget the slowdown in China, gloomy real estate market that you're seeing coming in there. Pricing pressure in terms of the export market and subdued global demand are impacting the demand as well. Back home, higher imports and lower exports are weighing on the prices. So let's keep an eye out on all these steel names that are in focus today.
All right, let's talk about Man Infra then, and that particular counter saw an uptick of approximately 2% earlier, touching the highest level since May 4, 2022. The company is basically on track for a third consecutive session of gains, if the trend of the gains holds up, because right now, as you can see, it has given up most of those morning gains. The company said that it plans to develop residential project at Ghatkopar East in Mumbai, and this project has the potential to generate about 1,200 crore rupees in the next 4 years. This is what the company stated in the statement. So on back of that, you have this particular counter that is in focus in trade today. Right now, only trading with gains of 0.7%.
Okay, let's move on and talk about a private bank on the charts then, Kunal, and that is Axis Bank. What are the charts indicating for this one? What is a trend that one should be seeing shaping up here? Last 1 month, almost 12% returns.
Call it as the race towards the 4-digit mark, and the comparison actually is between Axis Bank and ICICI Bank. Over the last 2 months or 2 months back, Axis Bank was trading at 820, 830 levels. ICICI Bank was almost at 900 plus mark. Currently, ICICI Bank is still at 930, 940 levels, but I think Axis Bank has managed to surge past ahead in terms of the the denomination. But I believe that at current levels, as I was mentioning earlier for RBL Bank, that the tilt is more towards the tier 2 banking names and not the traditional large cap banking stocks. And that's why I think the likes of Axis Bank, IndusInd, etc., these stocks have managed to outperform in the last 1 or 2 months as compared to the heavy-weighted stocks from the banking names. This is a good sign because this indicates that we are now not too much dependent on the larger cap banking stocks like ICICI, HDFC Bank, etc. And the weight could be shifting ahead to these tier 2 names. Axis Bank on the charts looks extremely attractive. I would believe that with this round of momentum, the stock can very soon break past about the 1,000 mark, which should be a very strong price-wise as well as a psychological breakout for Axis Bank.
All right, moving on, Vamakshi, let's talk about Edelweiss financials. Why is this one in focus?
Well, Cheryl, the stock is in focus today, and not just today, it has been in focus over the last 3 trading sessions. Now, in these sessions, it has advanced by almost 15%. As of now, as you can see, trading nearly 5% higher. Now, when we look at the company's, the news surrounding the company, well, it has been adjusted for demerger on June 2nd. Also, June 2nd happened to be the record date for determining the eligibility to receive shares of Nuvama Wealth Management. Now, the allotment is expected to happen on June 10th, and the listing of Nuvama Wealth Management is expected by either July or August of this year itself. Now, post demerger, it is also important to understand how Edelweiss will shape up. The net worth is expected to decline from 8,500 odd crores to 6,150 crores. Even the book value per share is expected to fall from 72 rupees per share currently to 46 rupees per share. Apart from that, when we look at Nuvama's contribution to Edelweiss Financial Services consolidated PAT, that stands at almost 38%. But what is the way ahead for Edelweiss? Now, they continue to hold a portfolio of 7 businesses. They will continue to grow as well as enhance their value over there. The demerger move is also expected to strengthen their strategic alignment and create as well as unlock value. So that is the news flow surrounding Edelweiss Financials, and as you can see, the stock is soaring away in the trading session today.
Let's move on and to stock number 10 for today, All Cargo Logistics. Lisa, what's the news flow here? Why is this one in focus?
Yes, Vinny, All Cargo is gaining as its demerged entity. They are planning to sell stake to Blackstone. Well, All Cargo Logistics has entered into a definitive agreement with BRE Asian Urban Holdings, which is controlled by the funds managed by Blackstone. So, getting on the finer details of the deal, Trans India Real Estate, which is a subsidiary of All Cargo, they have agreed to further divest 10% stake in each of the 5 subsidiaries of All Cargo and also 100% holding in All Cargo Multimodal to Blackstone. Now, after this completion of the transaction, All Cargo will no longer have sole control over certain subsidiaries that were involved in the warehousing business. So that's the reason we can see All Cargo buzzing in trade today.
Moving on, Kunal, let's talk about Grasim and how are the charts for Grasim looking like? Do you think that this major player in the cement arena as well as a viscose fiber, you think it's worth looking at an investment in this one?
An underperformer, erstwhile, because the stock was one of the laggards in terms of the cement pack specifically, because most of the large cap cement names, they had actually come back to their previous major highs and broken past above those levels. But Grasim is trying to cover up and as well as catch up with those players and those trends. In the last couple of months, the stock has confirmed the breakout of its 200 DMA. In the last 1 week, the stock has managed to give a technical breakout. We call it as golden crossover, where the 50-day moving average crosses above the 200 DMA. Those are generally signs that the near term as well as the medium term trend could improve significantly for the stock. So for traders who are trying to latch on to stocks which have been underperformer and would probably try and play a catch up with the entire sector, I think Grasim could be one of the stocks which could fall perfectly well in that category, expecting the stock to cross 1850 mark possibly in the next 1 to 2 weeks.
Okay, let's move on and talk about MTAR Tech. This one is in focus today. Why? Because we're seeing, actually it's on the back of a block deal that has happened, bulk deal that has happened last evening. We came to know that Plutus Wealth Management has actually acquired around 4.3% stake in the company that's worth around 247 crores. So keeping an eye out on that one, because what has happened is now they have purchased 13.15 lakh shares, which is 4.3% stake in the company, and the sellers of this are the three promoters, Usha Reddy, Anita Reddy as well as Kavita Reddy, who have sold the stake in the company. So they have sold 3.64% stake. The main buyer, obviously, we have seen 4.3% stake is acquired by Plutus Wealth Management, and this is via the open market that they have purchased these shares as well. So on the back of this news flow, we're seeing that MTAR Tech is up 2% in trade.
All right, moving on, Kunal, let's talk about Oberoi Realty, a name that we rarely see actually when we talk about the real estate pack. The charts are looking interesting, is it?
Yeah, I purposely avoided DLF and Anantraj Industries because of the way these stocks have moved up. But I think Oberoi Realty is also another stock which is looking quite bright in terms of the recent charts. The stock has come back towards the 7 to 8 month swing highs, trading at the 980 approximately mark. So I think a closing of maybe 1,000 plus for Oberoi Realty could confirm that kind of a breakout. And I think more importantly, what we're seeing for many of the stocks is a phenomena of golden crossover, where the 50 DMA is crossed above the 200-day moving average. Those are very strong signals that a near-term as well as a medium-term trend could improve significantly better for these names. So what we are actually seeing is a strong momentum which has come back into the realty pack, and many of the laggards or the erstwhile laggards, they are making a good comeback, the likes of Oberoi Realty. I believe post a breakout above the 1,000 levels, we could be looking at a swift upside of 1,050 to 1,080 over the very near term.
All right, moving on, let's talk about Thermax then. And Thermax is the one that's declining in today's trading session. And why is that? Because an arbitration panel ruled against the company in a matter related to breakdown of two gas turbo generators at one of its customers. The award would have an estimated financial impact of about 250 crore rupees for the company. This is what the company declared in the exchange filing. The arbitrator had directed the company to repair and reinstate both the generators at the customer's plant under the defect liability clause, and also allowed claim on additional expenditure on power along with interest costs. The company has been advised that the order is not based on proper appreciation of facts and is in the process of challenging the award before the appropriate appellate authority. This is what Thermax said in their statement. However, the fact that the company stated that this particular arbitration award that they have to go ahead with will have a huge bearing on the company's financial. They said they see an impact of 250 crore rupees. So therefore, the reason, that's the reason why the stock is falling. We will just show you with the refresh graph of the stock. And the stock actually fell most since May 19th on back of that.
That was 250 crores, right?
250 crores is what the financial impact will be on the company.
So, okay, we are keeping an eye out on that figure over there. But let's talk about the cap goods space then as well. And Vamakshi, what is happening in the capital goods space? Why have you picked out this whole sector for us today?
Well, Vinny, if you look at the cap goods space, it has been buzzing since the last few trading sessions. And in fact, when we look at the stocks that are in focus today, they are on the back of a brokerage note that came in from Credit Suisse. Now, they believe that the investment cycle is picking up momentum. It could surprise positively, and because even in the past it has skirted several pitfalls. Now, as far as Credit Suisse preference order is concerned, L&T, they believe, is a late cycle beneficiary and still has attractive valuations. As far as Ultratech is concerned, they believe that the commodities pullback, particularly for Petco, could be positive for this counter, as well as the counter does have some reasonable valuations. As far as Cummins is concerned, the valuation looks quite attractive, particularly in context of the peers with modest cyclical play. Apart from that, they have an underperform rating on Concor. They believe that the company is losing market share, and there is a lack of any evidence of road to rail shift so far. ABB, they believe, has higher valuations, as well as Voltas, they believe, is losing market share, as well as seeing a dip as far as the margins are concerned. So given this brokerage note, we do have a positive outlook on Ultratech Cement as well as Cummins India, but we do see that Credit Suisse has maintained an underperform or fall on Voltas, and that is the reason why you're seeing an uptick of almost 2.5 to 1% as far as Ultratech and Cummins is concerned, and a downtick of almost 2.5% as far as Voltas is concerned.
All right, moving on, let's talk about Ultratech Cement, then taking one of those stocks that Bamakshi was talking about. Ultratech Cement, Kunal, we spoke about Grasim, but Ultratech from the similar family. How are the charts looking? Similar to Grasim?
Yeah, similar to Grasim, but again, I think Ultratech has been the leader for the entire cement pack. I think I remember in the month of March, when the markets were going through a lot of volatility as well as pessimistic kind of a round. That was a time when most of the cement stocks were also trading negative, but Ultratech Cement was trading at 7,300 to 500 mark, and was perched at a fresh swing high for itself. So that was the starting point for Ultratech Cement to start to get into an outperforming zone. It's maintained that outperformance since then. Now at 8,000 plus mark. Today also I think the stock has broken past and formed a bullish flag kind of a pattern on the RE time frame. So which means a potential breakout of another 200 to 250 points on Ultratech Cement. So this leadership move for Ultratech Cement continues, and would expect the stock to come back towards 8,200 to 50 mark over the very near term.
That's the view coming in from Kunal on Ultratech Cement. But we also spoke to Harsha Upadhyay, CIO at Kotak AMC, and he's overweight on the capital goods space. What more he had to say? Where does he see a re-rating coming in? Does he see it coming in? Let's listen in.
The overweight sectors in our portfolio for quite some time now. However, the current valuations don't leave too much room for further re-rating from these levels. However, the order book continues to be very strong. The execution is also near perfect, I would say, in most cases. So if you're a long-term investor, you can still hold on to some of these names. But in the very near term, we think there is no further room for valuation re-rating in this basket.
All right, moving on, let's talk about IEX, Lisa, and this one is sulking in trade today. What's the reason for it?
For May, and if you look at it, the overall volume for the month, that was higher by 8% on year-on-year basis, but the market clearing price, that was down 30% on year-on-year basis and stood at 4.74 per unit. And the reason for the fall in the price was because of the improving supply side scenario as well as the cooling weather condition. Now the management has provided an outlook going forward. They said that the demand for the power is expected to rise in the coming months, and also the availability of power supply, that is also going to improve on the back of increased coal supply, the lower prices in e-auction coal, as well as the decreasing cost of imported coal. So these factors will lead to competitive prices going forward, and that remains a near-term challenge for IEX. So that's why we can see IEX sulking in trade, not only today, but even in the last 1 month, it's down 7%, and in the last 1 year, the stock is down by 15%. So that's on IEX.
That's the word coming in on IEX. But let's move on to an ET Now exclusive. The race for Indra IVF is picking up with the new entrant. Now, my colleague Anurag Joshi is here with more details on that. Anurag?
Yeah, that's correct. So CVC Capital Partners has put in a non-binding bid for Indra IVF, which runs a chain of fertility clinics across the country. CVC joins the race to acquire Indra IVF along with competitors in the deal, which include BPEA, Equity and Blackstone, who are all looking to buy a controlling shareholding in the company from the company's founders led by Ajay Murdia and PE firm TA Associates, who right now have a majority equity control. Now, if a successful deal happens, the winning bidder is going to be buying majority control in Indira IVF. And the sources told ET Now that the first round of the deal, of the sale process, is nearing completion. So there is still some time to go, before the deal is concluded and, the buyer acquires the stake in the company.
For that, Anurag, for getting us the latest details on that particular front. But on that note, we slip into a break in this edition of Market Fatafat. Stay tuned. When we come back, we'll take you through some more stocks, but don't go anywhere.
Great news.